Hi guys, welcome back to Financial Markets. Hope you're all doing well. So as naturally, I'm sure you all are aware, there's been a really interesting time right now in the markets, in all assets to be honest, whatever space you are investing in, whether that's equities, commodities, currencies, bonds. It's everywhere. It's just a significant amount of volatility. And I thought it would always be interesting for obviously you retail traders to get some ideas on what other people are thinking, because then it can be used in your methodology process. And that's what this channel is here for predominantly, is to help give you at least views and opinions that I have, which can be used in, so if you're pro, say, something and I'm against it, at least you got some more views as to why he's against it. And so that way you have some more granular and methodology within your work, because at the moment a lot of people have one view of something and they don't have anyone to challenge them, especially in the retail space. And so being a formal trader, I used to trade at a hedge fund, a big billion-dollar hedge fund. I used to trade everything. I've traded everything. I've been around currencies, commodities, bonds, equities. So I think it'd always be good to sort of give. I always want to give back to the retail community. So I think this is always a good place, and this is a place to shine, because when markets are tough like these, a lot of people are either losing a lot of money, not knowing what to do. And naturally, I thought we could start somewhere where everyone is familiar with some big stock names. Because it could help you with your pension, your long-term investments. So just to begin with, so we've seen obviously the S&P has been down 35% and it's rebounded about 25% from its lows in quick succession, to be honest. It's only been about 10 days. So you see here 23rd of March to about 9th of April. And so naturally you're seeing this significant amount of complete whipsaw and vol in the market. So it's always, people are always having that view. So what's happening? Is the market bottomed? Are we seeing a complete V-shaped economy or V-shaped recovery? So what V-shaped people call is, they say, okay, it goes down in rapid succession and then it's going to have a complete V recovery like that. I mean, I personally don't see that. I don't think, the people are pricing in. Well, people have realized that the economy is under a big problem, but what's happening is right now it's just a lot of froth. And just to give you all a bit of an insight, so what actually happens at the end of the month is you have all these pension funds, these systematic hedge funds, they all have their rebalancing. And so what happens is, because of the rebalancing, people like to cut or add positions into their book at that point. And so you do get a lot of flows coming in at the end of the month. So sometimes that could give you wrong indication of how the market is actually going to be, because it just could be a temporary thing based on rebalancing. And systematic funds in particular, that you're always using start of the month, end of the month. So just to be a note of that. So that's one, I guess, really big tip for all of you, because that does happen again in the industry. So I thought we would start with Microsoft. I think Microsoft is a good place to start because it has fallen less than the market. So the market, as you remember, it fell about 35%, and Microsoft has only fallen about 28%, and we've had a 20% recovery since. So what's interesting to know about Microsoft, because it has fallen less. Now, how do people perceive that? Some people say, oh, well, it's fallen less than the market, so it should fall more. That being said, that's not a right way to view things. If it's fallen less than the market and the market has fallen more, that shows you the stock is quite well. It's quite good stock. People are still putting money into it. People are not willing to liquidate that stock as they are to, say, the other parts of the index. And it makes sense, right? Microsoft is a big, well-known name. It's got money from pension funds, endowments. It's got money from hedge fund managers. Everyone has been, has Microsoft as a passive investment, because quite frankly, it gives you a better yield than putting money in your bank, and people consider it a company that's not going to go bust. And so you always have that, people pouring into money into it. And so you've had a recovery on it. So what's interesting to note, though, if you look at the bottom, it's a volume chart. So you see volume substantially increased here, which makes sense, right? People are liquidating and getting out. But interestingly enough, there has been a decline in the volume, while we have had subsequent rise in the market. So that is something really interesting to know, that the volume has gone down, yet the market has gone up. Now, there's a couple of reasons for that. One is that the buying power naturally has been more powerful than the selling. So even though there's less volume, there are people that are just coming in and buying, and because the sellers are now out of the position, which is true. But there's also sometimes another reason, is that it shows that there is not big conviction potentially behind this rally up. And so what's happening is there have been a fair amount of people that have obviously come in and bought the stock, but there are a lot of people still sitting on the sidelines. And so that gives you the indication, well, okay, what is the sentiment of investors out there? And so that shows you that, look, we've had a big decline, and we're having a recovery, but there is not that much faith in the economy just yet for investors to say, you know what, I think the market has done its thing, the economy has fallen, it is tanked, and now it's going to be a recovery, and we're going to make some, we're going to go back to a normalization. And I think what people should do is first focus on, look at the coronavirus right now. Have we started resuming activity? Have we stopped the lockdown? No. So what is, as an investor, when you're out there right now, sure, you might say it's valued now, what, 10% lower? Oh, sorry, my mistake. Is valued now what? 10% from highs. Is that really a big enough discount for me to get in? Especially when the economy could potentially be shut for 6 to 8 months? I would argue no. And so I think what people should do is right now if you've liquidated, good, stay in cash. If you haven't liquidated, this gives you a really good opportunity right now to start liquidating some positions. Maybe not your whole book, maybe not even half your book, but at least a third maybe of your book, or maybe even a quarter of your book. And the reasoning is because, quite frankly, the market's rebounding quite quickly, not really on good news. There's been more deaths, countries have been still in lockdown. In fact, there will be even a bigger lockdown, meaning everything is going to get shut. So it gives you that indication that, look, things are going to go on for a while. So you might get, you might get Microsoft from here going like, we'll go here and we'll have some whipsaw in the markets. But, as an investor, you're not going to make money like that, right? You're holding it for a while and for a long-term period. And if you're a trader and you're telling me you can time when it's going to fall and rise, I mean, if you're really saying you can do that, by all means go for it. But I'm sure everybody watching, and even professional traders, by the way, just so you all know, cannot do that. You can't precisely time the market like that. They're going to get, trade the whipsaws in and out. So the best thing to do right now would be, if you've liquidated some, great, stay on cash, find these big names like Microsoft, like Apple, like Facebook, like Google, and start focusing on them when they start giving you a substantial amount of discounts. And if you haven't got into cash yet, now would be a time to start exiting some opportunities. Get out in cash, get some clarity in your mind, and think about where you would want to invest next. Hope this video is very useful for you guys. And let me know what else you want to see in the comments. Please subscribe, like, and comment, and I'll see you guys in the next one.